Hi, I'm Christine Summers. Losing a spouse is never easy, and in the midst of grief, there's often a whirlwind of legal and financial questions that pop up. One big question that often comes up is, what exactly does the surviving spouse receive? You might think it's straightforward. Maybe they inherit everything, or at least get to keep the house and the bank accounts. But when you dig a little deeper, what's really beneath the surface might surprise you. Let's break it down into simple terms. So contrary to popular belief, the surviving spouse doesn't always get everything automatically. What they actually receive depends a lot on how assets were titled, the presence of a will or trust, and state laws. For example, if the couple lived in a community property state like California or Texas, many assets acquired during the marriage are considered jointly owned and automatically belong to the surviving spouse. But in other states, things can get more complicated. If you and your spouse owned a home, bank accounts, or investments as joint tenants with rights of survivorship, those assets typically pass directly to the surviving spouse outside of probate. That means they don't get tangled up in the court system and your spouse gains control pretty quickly. But if assets are owned as tenants in common, your spouse only owns their share, not the other half, so that portion would be handled through the will or trust. It's a nuance that many people don't realize until after a spouse passes. And here's where things get even more interesting. Retirement accounts like IRAs and 401ks don't automatically go to the surviving spouse unless they're named as a beneficiary. If your spouse isn't the named beneficiary, the account could pass to children, other relatives, or even a trust, depending on what's on file. And if no beneficiary is named, the account usually defaults to your estate, which could mean delays and complications. So the big takeaway is this: always keep your beneficiary designations up to date, especially after major life events like marriage, divorce, or the birth of a child. Beyond the tangible assets, surviving spouses may be eligible for Social Security survivor benefits. These aren't automatic cash handouts, but they can provide important monthly income based on the deceased spouse's work record. Eligibility and amounts depend on your age, your own work history, and other factors, so it pays to chat with the Social Security Administration or a trusted advisor to understand what you qualify for. If there's a life insurance policy, the surviving spouse typically receives the death benefit if they're named as the beneficiary. But again, if the beneficiary designation isn't current, the money could go somewhere unexpected. What your surviving spouse actually receives can be surprisingly complex. It's rarely a simple, everything goes to the spouse story. There are many moving parts, legal terms, and paperwork involved. The reality of what a surviving spouse receives can be more complicated than it looks at first glance. But with a little awareness and proactive planning, you can avoid surprises and make sure your loved ones are taken care of exactly how you intend. If you're planning for the future, now's a great time to review your estate documents and beneficiary designations. And if you're a surviving spouse navigating this process, don't hesitate to reach out for professional advice. Getting clarity early can save a lot of stress later. After all, understanding the details means you can focus on what truly matters, honoring your loved one's legacy, and moving forward with confidence. If you feel a need to put these types of plans into place for your own purposes, feel free to give us a call here at the office at 518-406-5624. We'd be more than happy to give you some guidance on how you can best plan for your life and your future. Thank you for watching. We'll see you again soon. Take care for now.